Alright, hands, that's enough, mates. I'm not talking about Gold Star, talking about Hans Zimmer. Hans Zimmer wrote a lot of the music in many famous movies actually, but I mean probably his most famous is Gladiator. Did a great soundtrack there, but that one is from Interstellar. You may sound familiar to you. Just some soft background music there today. Get us going here in the markets. Alright, boys, so fairly interesting ECB last night. Now, I was scheduled to do it, I was semi scheduled to do it, but uh, as you probably saw, we had some interest there from Ryan to do it, and Ryan actually had open trades in the euro, so I stepped aside, and covering some of the NFP and ECB in the past, I have sort of come into his time zone, so I'm like, let him do it, see how it goes. He did a good job. I mean, it's he basically read the reversal well, the responses from Draghi, which got the market selling the euro. On some levels, it was a little bit surprising the market sold so aggressive. Draghi didn't explicitly extend QE without tapering. He sort of hinted at that though, right? He kept on saying the same phrase with the same tone again and again, and the market was just in the mood to sell the euro. We got past, we got past 110 briefly, but at the end of the day, all it wanted to do was just get justification that it wasn't, there wasn't going to be just an abrupt stop, and it's pretty clear that there wasn't going to be an abrupt stop. And the way he formulated, kept on going on about how we hadn't talked about it and waiting for the next set of staff projections to be updated, meant that it came across more dovish than hawkish, that's for sure. And with the market already in the buy US dollar mode, it was hard to stop. It was hard to stop the follow through. And sort of once you get that reversal from above 110, it's like, whoa, what's it going to say now that's going to get the market to go back up? So there's a bit of logic fighting you have to do when you're trading markets. Sometimes the bears were in control. If it wasn't a big rally, there was going to be no rally. So keep that in the back of your mind next time when you go counter trend. If you're looking for that buy into news like that, that is especially since we did break down out of a huge wedge, right, in the previous week beforehand. So there is always going to be the potential here for follow through selling in the euro, and the downside is now opened up, I believe, towards the 106 level. Nothing crazy, but that coincides with the Fed raising rates in December, so it's just probably going to line up together. And that's just the way the market's set up now. It's not huge moves, but it seems the likely path. Could there be things which derail this move down to 106 and dollar yen's move to 107? Of course. I mean, two big NFP numbers before the expected hike rate. US elections before the expected hike rate. US elections appear to be over though. It looks like it's going to be a clear win for Clinton. It's almost Trump. I don't know if you guys watched the last debate, but certainly in America you don't sort of buck certain traditions, and one of those is fighting the result of the US election. You got to be respectful of that, because the counter, the whole elections are rigged, that way leads to civil unrest, and they haven't really had huge sort of rejections of the popular vote in that country in the past. So it's very, very dangerous precedent, very hard to come back from, ultra negative subject for many Americans. I think apart from the woman vote, it's going to be hard for him to recover from that. Clinton seems to have steeled herself against, she actually did a lot better job than I thought in terms of countering and she was being more tougher than I thought. She didn't get ruffled too much. So she's sort of passed the Trump test, if that's the thing, right? She's getting legitimacy just because she hasn't been, reacting as you'd expect to someone being geared up like that. And it's not like I'm a Clinton supporter at all. I'm obviously right wing, but it comes across to me that way. Now, that means it's really good for these dollar Mexican trades, and we're seeing some of the potential profit from the dollar Mexican moving law. And these are the trades we took from before the first election. Some of the potential profit we could get from this trade has actually been priced in already. So more than halfway to the take profit before the election results in, at some point it does favor just taking profit, right? Maybe 18, rather than you have some sort of surprise like the Brexit vote, or some sort of rebound as the market comes into the announcement with late polling suggesting Trump's closer than people thought. The person on the street, polls misunderrepresented the average man, say, similar to the Brexit, but have to be a big underestimate. So that whole rant is basically leading into what's going on with dollar Mexican, why we moved so far, shut the gate. The big gap here is on the back of the comments there, that release of Trump on the bus from Billy Bush over the weekend. So there's a huge gap there, and we've sort of cemented no really big bounce since the last debate. So sort of cementing this big move, and likely the next move is lower. Yeah, it's going to be hard to stop that. The Mexican has a natural relationship with oil, and oil is also doing substantially better in the past 2 weeks. So there's some catch up, relative catch up there to be played. Oh, Joe, leave Billman alone, man. You don't want to engage a guy like that, mate. Billman hasn't lost a trade since 2005. May not have done a trade since 2010, but he hasn't lost a trade since 2005. You got to remember that. Of course, real money, huge money. It's obvious. There's no reason at all to doubt what he says is true. Yeah, no, I've given up engaging that cat. But yes, continue, Bill. I'm not going to ban you again, man. Not unless you go completely over the top. And please just change your colour of your name. Yeah, so now we've got out of the Mexican trade. What's also happened since I last updated you is we flipped from long Aussie to short Aussie. Now this may be a little bit surprised because I was pretty hawkish there. So where did we do this? We did this after the data on. We did this after so my take profit was hit, and then coming in on Thursday, the data was really weak, and I was reading the internals there. It came across, it flashed on the screen from Reuters, and the numbers, the internals for the full-time employment is like minus 50,000. So the headline's minus 10,000, but the full-time is minus 50, the part-time's plus 40, right? So it's like, wow, that's really negative numbers. Also, the fact that the market's above 77, got another rejection. It's like, wow, everything's lining up against you today. So I sold that just for some follow through going into Europe. Got substantial follow through as the US dollar strengthened on the back of the euro falling. But I'm not very bearish on this. In fact, I'm going to put my stop to entry on this pair. And I'm pretty close to closing it. So I'm not a bear on Aussie. I'm just seeing how the euro goes. I'm seeing how the US dollar goes. So just going to let that one run. See if we can make a little bit extra money. So far, so good. If I had two positions, I'd close one for sure. Data-wise, the biggest thing tonight is going to be the CAD data. Since I last gave you an update on Wednesday night, there was the Bank of Canada meeting as well. And that was surprisingly dovish, but no one really took them too seriously there. So I would be buying dollar CAD very cautiously. Alright, I know it looks nice, but it's fairly similar to selling Aussie. If anything, I think it's more dangerous than selling the Aussie. So selling Aussie is the same as buying dollar CAD. I think it's a bit more dangerous. So if you're in the profit, let it run, see what happens. But I wouldn't chase here, and I wouldn't be looking to buy the next dip either. Trust the US dollar? No. The fickle nature of the market in the last few periods, right? Especially on the commodity currencies. How many times has it touched? 130.50 towards 132. 30-40 times, right? In the past 100 days. So let's be real here. I mean, the same argument can be made that we're getting too bearish on the euro too quickly, and that if anything, we're going towards a buy zone in the euro. Yeah, I'm open to that. No rally has been ultra successful in the euro now for nearly 2 years. So no trend anyway, sorry. Yeah, I bought a little bit of Aussie Kiwi today, so if you're waiting to see my feeling on the Aussie Kiwi, we've been talking about buying the Aussie Kiwi on the pullback towards 106. We got that last night. Took a little stab at it, mainly because of the level and I wanted to see what happened down here. Had a nice little rally in Asia, so tentatively you can say buyers came back in. Alright, now the whole idea is that RBNZ is going to cut rates, and we're going to see a kick to the top side towards that 110 level. If we got a pullback towards 105, it would be more ideal. But there was a bit of a pullback, enough, at least short term for me anyway, post the employment data to get some buying going on. A little bit cleaner in the market was the Aussie Kiwi shorts. But I don't know. This sell zone up here is pretty clear, right? But I'm not. Nah, it's not for me. Not for me. I don't have the conviction to pull the trigger. You have to be pretty bearish here, or bullish oil, to be selling up here. Looks pretty choppy. But selling, say, New Zealand dollar CAD would probably be clearer than the Aussie CAD. So New Zealand dollars failed a little more sharply than the other commodity currencies, and I think we're just getting too close now to the RBNZ for the buyers to be coming in as quickly as they did on the Aussie. Pretty important actually. A couple of days coming up for the Kiwi. November 10, so that's not too far away. There was a bit of selling on the dollar yen a couple of days ago. Now, this provided a good opportunity to buy the dip if you're bullish. This is on the back of one of the members of the BOJ coming out suggesting that we're not going to be doing any easing anytime soon. The market obviously doesn't like that, bought a bit of yen, but the dollar yen rally is not really from the selling yen side. It's coming from the dollar side. It's coming from the rise in the US yields. It's coming from the anticipation of the Fed raising rates, and from the expectation that even though if BOJ might not be doing much more, they're definitely not raising rates anytime soon. And also just general euro breakdown is adding to the US dollar's going to have to go somewhere. Dollar yen, pretty clean little way of expressing that. So I don't mind the old dollar yen long. And I do feel the same way that the euro is going to 106, that the dollar yen is going to 107. So I'll be looking for both of those in the coming weeks. Sooner rather than later too, guys. I think the Fed will lock in December with a series of hawkish Fed speak. Probably going to have to wait until we get the NFP for October in early November, but if that doesn't rock the boat, comes in relatively close to expectations, above 150,000, then yeah, you could see a more sustained US dollar rally. And the market will rally early, not late, right? It'll price in that the full 100% or 90% chance of a rate hike well before December. So apart from that, there isn't much data, apart from the CAD data tonight, and so you're going to see not too much action apart from the euro and the dollar yen leading. Stock-wise, the certainty, or not certainty, but the sort of dovish tone that Draghi gave helped the DAX to rally. With the DAX rallying, you're getting some support coming through on the US, so no negativity there. And so that stability is making risk appetite a non-factor. So sometimes it's not risk on, risk off, it's just risk, sort of neutral. And when it's not a factor, then you have to look at some of the other things going on, like the yields or just breakouts, like the euro breaking out. Alright, Kichi, you've sent me a PM. Hey mate, is there any way you can explain how you go about to place a trade? And when I decide to place it? Jesus. It's a pretty broad question. How I decide to place a trade or when I decide to place it. Look, I'm looking for opportunity. I'm looking for 200 pips. The next move, right? 200 pips are clear. If I can see the next 200 moves, if I understand the story behind it, and the technicals line up with the story, that's the sort of thing that I can pull the trigger on. Maybe not even 200, maybe 100 pips. And so that just requires a bit of practice with how the market reacts to certain news, how the market was positioned before that certain news. Someone over here say stuff like, "Wow, that couldn't come at a worse time." That'll be something like if the market was geared up to rally, and something came out and just cut its legs out. So not just stopping the rally, but potentially reversing it. Whatever XY news is, then that's the sort of thing that I'd be interested in. Or it could be something with Japanese. It could be like, wow, that's really bullish. I can't believe they said that. Or it could be something along the lines of, I don't know. It's hard to say, right? It's hard to give examples, but Fed Fisher comes out saying, wouldn't be surprised to see rates raised twice in the first half of Q of 2017. Stuff which is just like, whoa. And the markets moved 50 points in the first 5 minutes, and everyone's like, whoa, what's that mean? Well, Jesus, worth more than 50 points. Then you go and check what's going on in the bond market, see how real it is, and then you hop on a pair which would move the most based upon that news. So yeah, it's really broad, right? It's really broad, but I'll be looking at certain trades anyway. Hopefully most of the time I'm trading with a trend. Okay, but sometimes you do get the biggest returns from going counter trend. Let's just take example the dollar Mexican trade. I really liked the idea when I first heard it, and I sold before the market reversed. So this was dangerous first trade. Second trade, much clearer, much more safer. Third trade, just following the trend. Okay, and if I add more, it'll just be adding more to the trend as the market's moving in the direction. And you can see the market being able to move more and more and more. But the first trade was definitely counter trend and was dangerous. Okay, so it's if you're it's a huge question what you're asking there, mate. It's not a small question, but if you watch the stream over every day for the last 2 months, you probably have a pretty good appreciation of how I approach the market. Very much into market analysis. You can Google that. Into market correlation analysis. It's just looking at a lot of pairs and understanding how they're connected and knowing what's moving what, and then focusing on the big picture more than the little picture. Pound. We were talking about pound Wednesday. We were so excited. Then Germany's Merkel came out and cut its legs out. It's been really doing nothing since then. Euro pound's been doing some nice selling though. Euro pound is always a way to play the pound potential reversal. So while the dollar while the dollar's not so clear, then a little bit more clear on selling Euro pound just because the euro's so weak. Maybe that's near its end anyway. I don't be opening pound trades into the weekend. That's when you get a lot of weekend stories. That's when you got a lot of shenanigans coming out, especially in the UK. Lately it hasn't been good news, but you never know, it could be. So they're gearing up for a fight with Europe. That's fine. So both are positioning tough stances, probably going to negotiate and have a softening of either side's stances. Maybe the public knows about how they've softened, maybe the public doesn't. It's in no one's interest to have a trade war, no one's interest really to not have a deal done between the two countries. But it's in the European Union's interest to appear to be tough on people leaving. You don't want to have more members of the European Union attempting to leave in the next 24 months. So I understand where they're coming from. And probably the level-head UK trade negotiators understand where they're coming from. Any thoughts on Euro Aussie, GDP, Kiwi, Euro Aussie? Euro Aussie must be below the 143 still. Oh. We haven't looked at Euro Aussie since we were first gearing up on its break below 133, 144, sorry. Oh, geez, that would have been a nice clean way of getting involved. Yeah, it looks weak as. That one makes a lot of sense, guys. A lot of sense. I've been looking for opportunities on that pair. Yeah, I like that. I like that. Tell me you're looking to sell, Peter. Don't tell me you're looking to buy that counter trend on something. Hopefully you're looking to sell that. Maybe for a test of 140. We'll see how it plays out. Alright, so look, that's enough for the my market update. Let's have a look at some of the banks' reports. See how they're viewing the market in the last 24 hours, 48 hours, their reactions to what's going on with the ECB. Firstly, one of the guys we like to read is obviously Greg Gibbs. He posted a pretty interesting article here on Aussie and the Kiwi. Yeah, but they're not crazy idiots, right? They're not going to sabotage themselves, you don't think, Jonas? And when I'm ranting about the market, guys, know that I'm very open to changing these days. You got to be very open, very flexible. Erratic FX behavior? Yeah, it was. That wiped out some clients that moved to 77.20. Actually got to 35 or something. I don't know why people are trying to buy the euro underneath 110. We can wait for it to reverse if there's a reason. If the Fed looks like it's buying, not going to lock down December, if they go that path, and Yellen sort of opened that door up, if they go down that path, you got yourself a crazy scenario in the markets here. This is very dovish. I wonder if the guy's short. He's focusing. The glass is definitely half full here. At some point, China's story is going to become a story. Maybe 2017 will be the year of China, right? If you get some major negative downside or uncontrollable negative movements, shift in sentiment towards China, then it might be unraveling there. But everyone has been calling the doom of China, including Kyle Bass, and I believe he's pared back his fears there. A lot of people had big options on yuan weakening, and the government just locked it down, and it didn't happen. Right, here we go. Apartment glut. So huge apartment glut in Melbourne and Sydney. Something like 50 cranes up in Brisbane, and a lot of it was pre-deposits, sort of bought by Chinese investors, and now they can't come in and get their money, or there's money's not coming out of China as cleanly, and so there's a lack of follow through in the buying of the deposits. So you're seeing a lot of building companies coming under pressure. In Brisbane anyway. I know about Brisbane and Gold Coast. I don't know so much about Melbourne and Sydney. But yeah, there's been a lot of talk about too many apartments. Definitely seems to be trending low, right? This is the rent prices. So this is the prices in general. This is the rent. Yeah, so I don't know when it'll hit the fan here in terms of the apartment building in Australia, but it's definitely an interesting post. I'll put that in the a link to this one in the wait, in the chat there. Aussie Kiwi 113 by the end of the year is very, very doable. Very doable. But, how's it going to get there, right? That's requiring Aussie to get to 78 and the Kiwi to stay somehow get. They have to cut rates in November and open the door for another rate cut. The RBNZ, and maybe dairy prices fall and you get to 113. Maybe with the, say, Kiwi at 69 and the Aussie at say 77.50. Where does that put us? So if you were talking about a cross somewhere and someone gives you a crazy number, not a crazy number, but they're saying, I think can get to this level, it's like, well, what are the underlying majors going to be at to get yourself to 113 on the Kiwi cross? Now, it got to 113 only a couple months ago, right? So it's definitely can get there. What is 77.50? Divided by 69. 112.30. So yeah, that's one way it can get there. That's not crazy talk either, right? That's not crazy talk. It's a little bit crazy talk. So I have my FX book. I've got like 20 my FX books. Yeah, I've got one or two left that are decent to link to. I mean, the problem with my FX books is if you're not playing like the signal game and you don't use conventional money management, there can be some crazy ass stuff in there. So one of my things, I had like 20,000 in there, took out 19,000, left 1,000 in, lost the last 1,000 on a punt, and forever it's going to have 100% drawdown on that chart. Even if I'm on that particular account, I might be up 30,000, but because of that one drawdown, when I left 1,000 in there just to have a muck around with, the stats on it are always messed up. Another one I showed you guys was where I was in huge profit. I took out a lot of the equity, closed out all the profit, had only 1,000 left in it. No, it was less than that. It's like $100 left in there. Closed out a $3,000 profit to get a 3 million% return. So my FX book, it's not that good. But if I was selling a signal to you guys, then I would definitely show you a my FX book. But yeah, no, there's still one or two there that I just don't have them open at the moment. No, I don't want to say that I'm not doing something on a stream, and then you go and check my FX book, and he's like, "What is he doing? Why is he selling the Aussie when he told us not to?" Yeah. Let's check the text there. We haven't checked it for a couple of days. Come on. Yeah, it's all about the RBNZ, really, Big Rev. And that's a big danger, actually, that the RBNZ don't cut in November. So we're just going to wait on the sidelines a little bit, wait for more data. Jonas, they're gonna get in trouble if we say that here. The RCDP's he's around there, mate.
There's a couple of Kiwis in the room. So I think we've got to be a little patient here. Definitely seems some settled down. Next week, there's still the potential here for next a nice little reversal in the pound. Stability leads to rebounds in after markets crash, but let's get past the news, the political news, which is Sunday papers, right? And dollar Swiss is looking very nice here for a test of parity. Very, very nice. Where is Euro Swiss? Where are we, Euro Swiss? So Euro Swiss, remember guys, is what we look at before we look at Pound Swiss, just so we know how much potential upside we've got in the Pound Swiss on any sort of move there. Ooh. Oh, keep an eye on the Euro Swiss back towards the buy levels. Okay, now Pound Swiss is becoming much more interesting. You had my curiosity, now you've got my attention, Pound Swiss. Where are we? So you want to know how I see the market, how I look for trades? It's I look for Euro Swiss to be towards 1.08. I go across to the Pound Swiss, and then I check the Euro Pound. If I was going to be selling Euro Pound next week because whatever reason there isn't bad news and the market looks like short squeezing again on the pound, I'll be jumping across to the Pound Swiss looking for some particular move there. As Euro Swiss comes back towards 109, you'll get an accelerated move there in the Pound Swiss relative to what you would have got from just selling the Euro Pound. And I'll explain that 20 more times in the coming week, next week, till you understand what I'm talking about there. Don't worry if you didn't get that. It's just basically what's going on with the Swiss is a lot to do with that. This whole thing, actually, Euro Swiss being where it is, makes dollar Swiss even nicer. There's a lot less risk here that dollar Swiss gets a sharp reversal if the euro gets a sharp rally. So you might be immune to a little bit to that. Yeah, we're really close to Euro Swiss long levels. I'm going to leave the Kiwi selling to someone else, actually. I'm not going to get involved in that. What could be a clusterfuck. Same as the buying dollar CAD. I'll leave the CAD to someone else. I don't want to get involved in that pair. It's just ruthless. Ripping apart people. Now Euro Yen, we could be tempted into a buy. Okay, lower levels. I love dollar yen, and I'm not ultra bearish on the euro. And it's very hard for dollar yen to rally without euro yen rallying. I think there's a lot of risks next year from the euro side. It's France and Dutch elections, also Italian elections probably coming back. The referendum will come back on the radar soon. That's coming up shortly. So yeah, we'll be sticking to negativity on the euro in general, but I'm not too negative on the euro yen. I am very negative on the euro pound. I just need to see stabilization in the pound to get involved in that pair. And you know, something like Renzi losing the Italian referendum would do it. Would be a nice little gift to the euro bears. Alright guys, sorry for being late tonight. Just having a little nap, little kip. But next week's going to be a lot better. I'm not doing 6 a.m. shifts, so we'll be a bit more on target there at the 9 GMT. If you do want me to look at anything next Monday, send me a PM over at forexsignals.com and I'll try to get a look at it. Good luck trading and trade safe.